Welcome to the Recon Trader. In today's video, I will show you how you can be wrong more often than you're right and still be extremely profitable when trading cryptocurrencies. Now, a perfect example would be my Engulfing Toro crypto bot strategy that I have deployed on the Moodrex platform. Now, if you're not familiar with Moodrex, they are a platform that allows you to configure and deploy your own crypto bot strategies, and you can actually get started for free. $0 will get you started, and you would actually be able to deploy an unlimited number of crypto bot strategies with the free account. Now, if you want to upgrade to the premium account, they're actually offering a 1-month free trial, so you could put it to the live fire test for 1 month and decide if you wanted to stick with the premium. What I like about the premium account is the unlimited back testing, and for $16 a month, to me, that unlimited back testing is worth the ask. And with that being said, I will put a link in the description down below, and by using my link, you will get a $25 sign-up bonus. So that basically would get you a month and a half free on top of the 1-month free trial. Now, that's enough jaw-jacking. Let's get into the weeds. So as I said in the beginning of the video, I will show you how you can actually be wrong more often than right and still be extremely profitable when trading cryptocurrencies, whether you're day trading live or deploying bots to automate your trades. Now, this particular bot I have deployed has only been right 30% of the time, and yet has produced 22% profit in a short period of time. And that is all possible because of a positive risk versus reward ratio. And in this situation, my risk versus reward ratio is essentially about a 1 to 3.5 as far as the risk versus reward ratio. And what I'm basing that ratio on is the average profit on my win versus the average on my loss. And that's how I come up with a 1 to approximately 3.5 risk versus reward ratio. Now, if you're not familiar with risk versus reward, anytime you basically place a trade, there is risk. And for bearing that risk, you should expect a return which rewards you for the potential of losses. Now, if you've watched enough of my videos, you've probably heard me speak about risk management, risk tolerance, stop losses. Well, another way to manage risk is your risk versus reward ratio. And a small risk versus a large reward ratio requires a lower win rate to just break even. And so basically aim small, miss small, and you can actually end up hitting the target and therefore achieving profitability. So let's break this down. So if I risk $1 and the reward is $10, I only have to be right 9% of the time in order to break even. Same thing with risking $1 with a reward of $4. Now I have to be right 20% of the time. Now I typically shoot for a 1 to 3 risk versus reward ratio, and I only have to be right 25% of the time in order to break even. And with that being said, I would consider a 1 to 2 risk versus reward ratio acceptable, because again, you only have to be right about 1/3 of the time in order to break even. Now, with a 1 to 3 risk versus reward ratio, I add one more successful trade to the win column and I'm profitable. But where people start to get in trouble is when they're trying to go risk $1 to earn $1. Now you got to be right 50% of the time. It's a lot harder than you think. And when you get upside down and now you're risking $2 to earn $1 or $3 to earn $1, now you have to be right 75% of the time. And there are very few professional traders who are right this often. And if you are, you're probably actually not putting on enough risk. And so that's how with this 1 to about 3.5 risk versus reward ratio, I can be right 30% of the time and still be profitable. Now, this is by no means my most profitable strategy. If we jump over to my Ichi Cross strategy, you'll see I'm only right 56% of the time, yet my overall returns are over 100% in like a 3-month period. And again, here my risk versus reward ratio is actually lower. It's about a 1 to 2.8%. So now I have to actually be right a little bit more, but I'm right quite a bit more than 30%. I'm right almost 60% of the time. And with that being said, I'm nowhere near the 75% right mark on this particular strategy. So you have to ask yourself, are you mentally capable of being wrong 44% of the time? Or in this case, can you mentally handle being wrong 70% of the time? You can see had a losing streak of 4. If we scroll down, you can see smaller losses, much bigger wins, but you have to ask yourself, can you handle this type of drawdown? And if you cannot, well, that's a factor you need to take into consideration when you are deploying a trading bot or just day trading in general. For me, I have confidence in my battle plan, and so it does not affect me one way or the other when I get a losing streak or my win rate is lower. I know at 30% I'm still profitable. But again, that's something only you can answer about your mental toughness. Can you withstand this kind of a beating? All right, let's break it down into dollars rather than percentage. So the example is, based on technical analysis, I purchase ADA at $1 with a stop loss price of 75 cents and a profit target of $2. In this case, I'm willing to risk 25 cents to make an expected return of $1 after closing the position, which is equivalent to a 1-to-4 risk versus reward ratio on this particular trade. With that being said, I would only need to be correct 20% of the time to break even using the risk versus reward ratio. And so if we look at that 20% win rate, that would be 2 wins out of 10 trades at $1 each would be $2 of profit versus 8 losses out of those 10 trades at a quarter loss each would be $2 in losses. So that would be a break even. Now, if I was able to add just one more win to that equation and ended up with a 30% win rate, that gives me the 3 wins at $1 each or $3 in profit versus 7 losses out of those 10 trades at a quarter each for a loss of $1.75, which happens to be very similar to the win rate of my engulfing Toro. And your mission is to never find yourself in a situation where the risk versus reward ratio isn't in your favor. So I would be curious on your guys' feedback as to what you consider before you pull the trigger on the trade to be most important: your expected profit or the expected loss. Shoot your answers down in the comment section, because I truly am interested in if you guys are focusing on potential loss or potential profit. And believe me, I do read your guys' comments. I can't always respond to them, but I do read them. And I think that pretty much wraps it up. I just wanted to do a quick video. I wanted to stress you don't have to win every battle to win the war. So if you like this video, do me a favor and spike the like. If you're not already subscribed, be sure to shoot that subscribe button. If you have any questions, leave those in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.